There we go. Hey, thanks everybody for joining us. We're going to give it just about 30 to 45 seconds here before we get started today, allowing everybody to jump into the conversation. Appreciate you being here with us. Share with us while you're getting on here. We're gearing up. I mean, I know, Kate, you're not in this place down in New Orleans. You're probably still pretty warm, but we're kind of heading into the holiday season here. We're already starting to see the effects of it with morning temps in the upper 20s.
Yes, no, I think it's probably 80 outside today. So we are completely good on the weather. We had a little bit of a cool down. Of course, it was Halloween that we had the cool down for a big one day. I think it was 40-ish, upper 40s, lower 50s on Halloween evening, which really threw a wrench in the Halloween costume prep. I was so, for the one day that we've had a cold, it was not an ideal day.
We were talking about that with our team here because the night before Halloween, we got 3 inches of snow. It was our first.
Gosh.
And so it's like costumes in the Twin Cities have to be like, you have to plan size accordingly to have attire on underneath them or have them covered up, and a kid that's not disappointed, one or the other. But yeah,
right, big puff jacket underneath and then whatever on top.
Those blow up costumes are very appropriate for here. Those multi-purpose. So yeah. All right, everyone. Thanks for joining us today. This is the last week in Mortgage Today. I'm Faith Howard Mooney from the Mortgage Collaborative, and so lucky today to have someone very familiar to our network with us, Kate deKay, who is the CEO of Eustace Mortgage. Thanks, Kate.
Yes, I'm so happy to be here. I love hosting, and I think this is my first time hosting with you, so love to have a chat.
I know, I'm excited about that. So Eustace we're in our 10th year here at TMC already. And, but Eustace has been with us since for almost 7 of those years at this point in time. So long-term member within our network. Also, you serve on our lender member board. And it's so exciting and so happy for you and so well-deserved that you were just named one of the top 50 most influential people of New Orleans.
Yes, thank you, Faith. I mean, the Mortgage Collaborative has been such a benefit to our company and myself personally, and the honor recently in New Orleans. It's humbling for sure, and I had set out to really kind of serve the community about 4 years ago now. And that moment, saying, okay, I'm going to commit, I'm going to do it. I've talked about it for 10 years. I need to find the time to do it. And it's kind of like one of those things where you never have enough money or time or any of the things. You just have to start doing it so that you get into it. So I finally committed, and I've been loving participating in the community with some more youth related organizations in New Orleans. And, of course, I guess as I do with all things, now I'm overcommitted. I guess there's worse places you could be overcommitted to. Thank you for that recognition. Appreciate it.
Yes. One of the greatest, we have a lot of great women within our network, but you surely are, in that list as well. So it was great to see a city that you so relate to and that is just the heart of who you and Eustace are, to recognize that as well. So you want to share, just so that we're kind of level set with the people that are on the call with us today and the people listening in after the fact, kind of just a brief little bit about Eustace and what you do in that market?
Yeah, awesome. So if you didn't realize already, we're based out of New Orleans. It's our headquarters. It's where I am as well. We're a company independent mortgage banker. We've been around since 1956 in the local area, and really mostly throughout Louisiana during that time. So we're certainly one of the longest standing IMBs in our area, and probably around, especially with all the things that are occurring today. And we're spread out over 22 states at this point. primarily in Texas and Louisiana. We're a mid-sized lender, and we're just a true retail model. Yeah.
Yep. And into New Orleans, it's the place to be for this,
Yes.
week and this upcoming year, and that you've got some events related to our business that are coming into New Orleans.
Yes, definitely. So MBA is hosting 2 events here. Most recently, actually, I think this week, the Accounting and Financial Management Conference. And then for all those IMBs, shout out to the IMBs that are joining and listening today. The IMB conference is in January in New Orleans. So come on over and visit me.
Yeah, I hope to do so. So we'll have to do some planning around that as we get closer to that.
Yes, you know it.
Let's start out today. So last week, right before this show happened, there was an announcement and a ruling related to NAR, and a ruling that happened in Missouri related to real estate agent commissions. Originally, the award was $1.78 billion in damages. I didn't know this, but that can be more than double, that they're estimating it could be up to $5 billion, which I was not aware that's how that worked, but apparently it is, with more expected from the judge that's ruling in the next week or so. And so just kind of wanted to talk a little bit about that. You obviously have been interacting with real estate professionals and agents in your area for a long period of time, and kind of like get your take on that, and then kind of anything that you think could potentially happen related to that.
Yeah, so it's really interesting, and I think your point is so valid too about the ability for the judge to kind of increase the required payout. And when you're, whenever you're thinking about lawsuits and things like this, it's like, is the money ever actually getting to the consumer? And I know I've, read a lot about it's really going in the lawyer's pockets, and probably, each consumer may see $100 or some sort of very minimal amount. So that's always frustrating, especially when you're ruling such a large amount in favor of consumers in that Missouri area. And I find it's a lot of slandering real estate agents with realtors, as NAR has been able to designate. And whenever I look at things like that, I always think something must be happening in the background, often, for things to kind of escalate to the way they are. Are the practices 100% correct in the seller required to pay for the buyer's agent? I'm sure there could be some modifications to that process. It's interesting though, in our market and most of the markets we're in, there is still, a negotiating power by the seller. I know that there's also then conversations about what kind of buyer or buyer's agent you're appealing to in that scenario. So if you're only willing to pay $100 to the buyer's agent, will those folks come through? So, I typically have always seen the realtors really, that's a communication piece and just an understanding on both sides what it means if you make the deductions. So they were required to pay, but required to pay could be $1. So, I find a lot of the headlines to be misleading, as if they were required to pay 3% or they were required to pay the buyer's agent 2%. Are commissions set that high often? They are, but it's certainly not required. There's negotiation. So, I think the end outcome, and I've talked to a lot of my real estate agent friends, they don't, there's no specific ruling to them at this point. NAR did change their requirement to say that you are required to pay the buyer's agent some amount to make that zero. So kind of right before the ruling, which also didn't look good in their favor, because right before a trial begins, you change it to $0. Seems like there should have been a lot more effort on our side to make some systematic changes prior to the trial. Maybe that's as simple as a disclosure that really has the seller understanding and very explanatory on what their options are. You know, you can,
Right.
here's what you can pay, but you're not required to pay it.
Yeah.
So again, on the realtor side, they're not clear what what most of the folks that I know, they're not even clear what they're doing. So
Yeah.
that kind of shifts me too, and I'd love to hear if you've seen anything around this as well. It kind of shifts to, so then what is the outcome? Who is it benefiting? And I think it's benefiting, the fintechs and the iBuying platform, some of the things that really want to affect the MLS and weaken the MLS, and be able to basically, open that market up. Competitive market is a good thing to some extent, but when we're talking about throwing Zillow in the mix and that they're going to all of a sudden control, the listing, I think that's also a bit of a scary concept.
Right. I think it goes back to, I mean, I always say it's all about the people. And the other thing that I always say is the headlines are always very deceiving. Because when I first read this, it said mandated, X%
Mhm.
that in Missouri was required. But then when you dig into it a little bit more, as with most things, they are typically negotiable, but it appears that it wasn't being presented in that community in that way. So, maybe it's a matter of disclosing, when you're in that process, that you have to disclose that this is not an automatic this percentage. This is something that we can talk about and negotiate on. I do think that that's a very, very valid point. I know when I bought my home in February, I negotiated that. There are great agents out there that can help you in a market where homes are really hard to find. And I was working with somebody that I had worked with before. I'm sure you have people that you've worked with all the time that are awesome and are very, very helpful to people and deserving of their commission as well. But I think that it kind of addresses maybe a little bit more of people that haven't been in the industry for a long time, and some of those first-time home buyers that are buying, choosing to go down a path of, I don't want to pay any of that. I don't want to pay any of that. So how do I not pay any of that? And there are some people that probably could do that, that are very knowledgeable about the business. There's also a reason why for sale by owners, aren't a large percentage of the marketplace as well. And so, I think I think what's going to happen is kind of out. Apparently, there is an Illinois lawsuit that's pending as well.
There's numerous for sure. And I think thinking broadly of the trickle down effect too. So if there is a broad change to how the buyer's agent is paid, certainly there's guideline requirements on our side that really eliminates a lot of that ability for what the buyer can pay. At this moment, that would be considered an interested party contribution, which obviously those percentages are regulated. VA just flat out doesn't even allow it at all for the buyer's agent to be paid through by the veteran. So there's certainly a lot, if there were a broad change, there would be certainly a lot that would have to push down from the agencies that regulate us as well to clarify what would be allowed and what would not, because certainly the outcome could be to marginalize that low to income, moderate borrower from access to purchase a home. And considering many of our goals and so many of the agency's goals are to increase access to home ownership, this certainly would do the exact opposite of that if the buyer's agent had to pay the real estate agent's commission, or certainly push to a completely different model, and one that you would assume would be disproportionate to that buyer, because if they're not being advocated for, if they don't have the correct representation because they can't pay for the representation, then they're just, they're probably paying a higher price or some other things that certainly would cover the cost. So it's definitely an interesting case to follow. And I'm sure, and as has already occurred, it will be expecting appeals. But I do believe that there's going to be, regardless of what the outcome is of, however much they're going to have to pay out, I do think that we're going to see changes and adaptation, based off of the rules that the National Association of Realtors was requiring. Those things adjust, and hopefully our agency guidance reacts accordingly.
Yeah, I mean, that was one of the first things that I thought about when I read it. It's like housing shortage, supply. And so here's another thing that could potentially impact the people that have lesser funds to get a house or be considered. You just don't want one more disqualifying thing for those people, or one more barrier that would prevent them from being considered an option to buy a home. I guess we'll wait and see. I did read or hear something out there that it's short term. Judges expected to rule on this within the next week or so. So hopefully by the next time we get together here next week, there'll be some sort of indication, at least of the first steps. But yeah, I definitely, there's an appeal coming. I think we all probably realize this, and this could take quite a period of time to kind of work through the process that's out there.
Yeah, considering how long agencies take to change our guidelines and what we're required to, we need it to take some time. They'll certainly take some time to react to whatever that is.
For sure, for sure. Also, last week, the Fed left the interest rate unchanged. I don't know if that's a surprise to anybody. It's like at this point, who knows? I would love to kind of like hear, when you hear things like that, obviously they're still strongly committed to this 2% target rate. I would just love to hear your opinion on, kind of like what you anticipate may happen. The next meeting is December 13th. So there's one more meeting left in this year. And kind of like just a reaction to that happening.
So, if I was an economist or I had the ability to predict all the things that were going to happen, I would say like I'd be on Wall Street and hopefully making billions of dollars. I certainly don't have that skill. And so that kind of leaves me the person that sits and just watches and waits to see what happens, of course, while strategically planning what outcomes could occur. I mean, in my opinion, the fact that they left it unchanged was, I wouldn't say surprising, but it was certainly a sigh of relief because, I felt like through, that moment, it's just, there's so much uncertainty and instability in the market that seeing one sign towards a positive change was very uplifting. I know with being a member of MBA and they had joined forces with NAR, who when I initially, they sent this coalition letter, I was very happy that NAR was joining forces with us. Of course, now I think in NAR's current demise, who knows? But it was also the National Association of Home Builders. So, strength in numbers is a great thing. And the two biggest requests were to leave the rates unchanged and also to not sell their MBS holdings, to kind of create a little bit more stability and kind of lessen that spread that we're seeing right now that's causing a lot of that uncertainty and volatility. So just seeing at least that one thing was occurred, and that their message was that they were going to leave it unchanged. So I definitely think that, of course, had the market rally when we were seeing rates in 8% that we haven't seen since I think it was like August of 2000. So it was certainly positive news. Unfortunate news, though, that they're not changing their stance on the MBS holdings. So they'll continue to kind of decrease that over time, which I don't think is necessarily ideal for the market. But in predictions and what others are predicting and kind of what I see the same, we're going to see rates at these higher levels for some time now. So the fact that they're just advising that they're going to stay steady and stick with the plan on their MBS holdings, I think we at least create some sort of stability, even in a higher interest rate environment, which, I have to say is the majority of what I want is just some stability in the market.
Yeah. I think that's what people are looking for too. It's like with all of the uncertainty that's even just out there in the press, for people that don't live this every day, they're only seeing like the one thing, and that, everything's chaotic and rates are so high, and all of those things. And I think, if we do get some stability and just kind of settle in somewhere, I think that, for the regular consumer out there who's not in this every day, I think that gives them some assurances as well, that based on the news out there, they probably don't feel that, even though we might.
Definitely. And look, and inventory is going to be an issue that we're going to have throughout. I think, on in my particular areas that we lend, insurance is another big issue. So we don't have an easy path in front of us, even if the Fed starts to signal and do what we need them to do on our side to kind of stabilize. We definitely still have some hurdles in the years to come.
Yeah. Well, and that kind of leads us into one of the things that people have been talking a lot about, the mortgage lock-in rate, where people, are fixated with their 2.5%, 2.75%, whatever they got that begins with a 2 or even a 3. That, that's what's to blame for everything. So there was a study out there this week that only 21% of mortgage borrowers cited that lock-in as their main reason for staying in their home, which I don't know. I guess I had almost convinced myself that that was the main reason, but really, I mean, there's a lot of different things going on in our environment and in our population as some of us are aging, and getting to that end. Some of them, 19% said they just had a preference for their current home. They had no desire to move. That wasn't what they were doing. Some of them, it was related not necessarily to the interest rate that they had, but the home prices that are out there. I think it was 13% of them. And they, 62% that stated that low mortgage interest rates is one of several considerations that they have. And so I think, when we think about that and everybody's so focused on, is it a 7 or is it an 8? It's not a 2 or it's not a 3. It's kind of like thinking really about the overall picture of things, that as with almost every situation, it's never just one thing.
Yes, and our business has always been cyclical. And we're certainly experiencing that now. But I thought this article was great because even with the 21% that cited that their lock-in was the main reason they were staying, I saw further down that only 6% intended on prolonging their stay due to the lock-in effect. So, I mean, if you think of it like that, in as a lender, that's positive news, because yes, we know we have other hurdles occurring. But if we're talking to each other and we're speaking on the interest rates, and this is gonna kind of lock people in to their housing for 7 years, 10 years, whatever the case may be. But luckily only 6% said that that was kind of any sort of long-term issue for them. We know that we're going to see rates at least come down a bit into a more historical average. So I think for the most part, I look at this article as really positive news for us, and just shows us that, weather the storm. We know that volume and things are going to be up. We know we're going to have an inventory issue. I hope we'll see, and I didn't notice anything. I didn't get to really dig into the article too much, but I didn't notice anything about insurance, which I thought was interesting because, I know I talk about it a lot in our market, but it's certainly occurring in other markets now, that it, hadn't traditionally, with wildfires and some of the other things that are going on in California. I know that it's definitely a barrier or an issue here in Louisiana and somewhat in Texas, and of course in Florida as well.
Yeah, it is in a lot of places. And I think that that is one of the things, honestly, that is taking, first-time home buyers find a home, they have an opportunity to buy. The high cost of insurance I can't remember what the dollar amount was. I wish I had it at my fingertips, but how much that has went up is actually making some people not qualify.
Yeah, what for sure. I mean, you can't throw in the higher interest rates, the fact that homes are still appreciating in most markets, high insurance, it all comes to a perfect storm for particularly for first time home buyers, which, in the current market is the majority of what we're seeing. Is those first time buyers being able to come in. So really finding that right mix for them
Yeah.
is certainly difficult, but working with professionals uh, and as many of the groups that are the Mortgage Collaborative members are, I know there's opportunity out there, but it's definitely difficult.
Yeah. More education, getting people prepped for it upfront versus finding out after you go through all the steps of qualification, and then you get down to that end and find out that that would just be devastating.
Right, especially when you're working with somebody that's not really in your market, they don't understand the insurance costs.
Yeah.
Sudden you throw that in. So that education piece is definitely instrumental. But ultimately, this particular article, I like the content and I like the fact that we're not sitting here focusing on which it seems to be, such the focus in the news. It's just the rate is not the focus, and I'm happy, and I think that stability that we talked about earlier with the market. If we can just have those two things in play, I think that even those percentages for the lock-in as their main reason for staying should decrease.
Yeah, 6% seemed like a great number to me. It's like if only 6% think that that's going to prolong them staying in, that's like a good number.
For sure.
Not much higher, like I think we've all been kind of led to believe. One of the things that's happening with our population as it ages, I always like to find a new term for the week. Not that this was the one that I wanted to find, but it is the one that I found, is our population aging. More people, single people, are staying in their homes for a longer period of time as they age. And what has been causing some of those factors and those things happening is what they are calling a gray divorce, which we all know that divorce can trigger home purchases, home sales, refinances, all kinds of things related to that as you dispose of property. But 38 million adults in the United States currently live by themselves.
Wow.
I thought that was extremely high. I mean, I'm an adult that is by myself, so I don't know why I was surprised by that. But I did think that it was kind of a high number, and they touted it's because of people divorcing. 1/3 of people that are getting divorced right now are over 50 years old.
Okay. And that percentage is obviously staying in their home. I feel like this could be a dating app. Maybe we create like a new scheme right now.
Kind of, it's like, well, if that's what's happening, doesn't that generate somebody else also living by themselves and going
Right.
out and purchasing a home?
Correct.
So
Yeah.
I kind of thought about it, a little bit differently, but it's like they're saying that it's not, senior living isn't like an isolated thing. It's just much more of a societal change. And part of that is because women being more empowered in the workforce, having more access to funds. That's been going on for a little while. Now, I wish it was 100 to 100, that playing field was equal. I think all of us women do. And we haven't gotten quite there yet. But women, having the ability to be a little bit more fluid, and be on their own as they age. And so I just thought that was kind of an interesting spin on things since 1990. Between 1990 and 2010, which 2010 is a while ago now, divorce rates for people over 50 doubled. So that old, adage of, it's like people staying together is kind of out the window. The other term that came up during this, which I just thought was kind of funny, is some people are calling them silver splitters.
Aww.
Silver splitters, referring to seniors who divorce and hit potential silver lining by suggesting that they may discover new beginnings by um, by splitting from their
Okay.
significant other.
And
So
is it also strange to you that 50 is kind of the age that they've talked about in this article and they're calling 50 seniors? Like, I think that's just also strange.
I know, I kind of do too. I would say calling 50 seniors is an old term, but maybe they're going by, yeah, the AARP.
55 is technically a senior still.
I'm thinking that 60 is still like not a senior. I don't consider myself a senior.
Agreed. You're not a senior. But yeah, I mean, when you're looking at that too, Faith, I mean, I would think from a housing perspective, you are adding, so that percentage may be higher for singles in homes, but if it is, more people getting divorced after 50, it seems that there'd be, additional housing needs for those,
Additional housing
other
needs,
side.
less surplus. So
Yeah.
kind of adding to the less surplus because you've got people that have access to funds that have probably purchased a home before instead of being in one household, now being in two. And so impact on surplus as people are aging as well. So yeah, so thought that was kind of an interesting dynamic. And of
Well,
course,
yeah, and to just the concept of housing and kind of, I'm sure there's certain areas, just like there's traditionally occurs today, where, if somebody's getting divorced, they probably still want to kind of live in the same area that they've lived in with their spouse. That's where their community is, that's where their friends are, that's probably where they have, healthcare or whatever the other situation is. So
yeah.
yeah, definitely kind of building up what those markets look like would be probably a new thought, new concept occurring.
Here at TMC, we have one person who always provides us great comedic relief, and she's mentioned in the chat for everybody that when she had a baby at 41, she was considered elderly. So
Okay, well, so they called me Jerry, so they created a kinder name for people pregnant past a certain age, because I think it's 35, if I remember correctly, and I was called geriatric.
yep.
So
35.
right. They've at least named, I can't remember because one of my friends was pregnant recently and she called it the new name. And I was like, that's much kinder than the geriatric pregnancy that I had.
Exactly. So I think we need to kind of like rethink our population and what it is and what it's like. But I thought that was very interesting, the fact that as this large, massive group of people are aging, that there are some of those impacts that are impacting other services, but also housing, which you just don't typically think of. So it went by so quick. It always does. It is always great talking with you. We really appreciate everything that you are always willing to participate in with us and the impact that you've had on other lenders and other women within our TMC family. You definitely are someone that we look up to and appreciate greatly. So thanks for doing this with us today.
Thank you, Kate.
For those of you who hopped on here, come back and see us next week at the same time. For those of you who are listening to this on our podcast or on YouTube, come and join us someday. We like to hear your comments and we like for you to participate with us in person. So we will see you next Tuesday. Thanks, Kate.
Bye, everybody.